Greg Fitzgerald here, and just a quick market update on what we're seeing as we closed out Q1 2020 and head into Q2 2020. Couple things. I'm going to talk about market conditions and kind of what's going on with the pandemic and maybe how that'll affect or won't affect the net lease market. Now remember, we focus on Dollar General and Family Dollar properties, so keep that in mind. What we saw in the first quarter of 2020 was still strong demand on from cap rate standpoint. Our cap rates on whatever we closed or put under contract was anywhere on triple net deals, a 6 cap to a 7.1, depending on the lease term remaining, location, and those things. On double net deals, it was 7.75 to 9.5. Again, depending on lease term remaining, landlord responsibilities, credit of the tenant, and always the location comes into play. So historically, cap rates still remained low, coming out of strong demand in 2019 and still into 2020. We're still seeing that strong demand even as the COVID hits. And looking forward, after maybe 30 or 45 days into the COVID, we really don't see the market changing dramatically. I don't see distress or anything so far into the pandemic, specifically probably because we're definitely focused on Dollar General and Family Dollar. There are a couple factors that are important to consider as we look at the supply and demand for net lease, specifically Dollar General, Family Dollar, and those types of tenants. Number one, the supply has been historically low since 2009. There haven't been any credit tenant retailers expanding with any large quantity since 2009 other than Dollar General. And now it's potential that all retailers and all development will slow, given that their business is kind of a boots on the ground, depends on municipalities and retailers and their ability to get due diligence and keep the supply moving. That supply will probably come down a little bit as a result of the pandemic, which will, of course, keep cap rates a little bit low. On the flip side, 1031 has been granted an extension, so that demand will almost flatten like its own curve because they've been extended to July. They don't have to take action and transact immediately, so supplies demand's coming into effect there. Both of those two things maybe will cancel each other out. The other factor on supply is retailers maybe aren't working in full capacity, not able to renew, so maybe you're not going to see quite as many second generation sellers putting deals on the market because they're waiting for lease extensions. So over the next 90 to 120 days, it remains to be seen what other factors, external, other markets that 1031 in or trade into what we focus on may also affect the supply, but that's probably beyond 90 to 120 days. But in the next 90 to 120 days, we really see the market relatively stable because of what I've mentioned here so far. Just a quick market update. I hope you're staying safe and look forward to staying in touch.